We're back on Morning Trade Live. We'll get a closer look at the mega cap tech trade when Alphabet, Microsoft and Meta platforms all report earnings later this afternoon. All three stocks are up more than 25% so far this year. Alphabet is up more than 40% in 2025 and hit a new all-time high in Tuesday trading. So let's go inside out on this week's mega cap tech earnings. Joining us now, I'm very pleased to say, is Steven Dickens, CEO and Principal Analyst at Hyperframe Research. Very good morning to you, Steven. What a day to have you on. What are your expectations for these three names come this afternoon?
Sam, huge week this week. Lots of points to signal on the AI trade. We've got Meta, we've got Microsoft, we've got Alphabet, we've got Amazon and Apple tomorrow. I think this is, for me, probably four of the largest spenders with NVIDIA around the GPU underpinnings. We've also got NVIDIA with their event going on this week. So a raft of announcements coming out. I was digging deep into what Google was announced yesterday at GTC with NVIDIA. So I think if you're looking for signal, this is the day to dig in. Over the next 24 hours, we're going to get all the data points we need to see whether CapEx is underpinning this AI trade. We're hearing a lot about a bubble. We're hearing a lot about circular investments. For me, we'll get the signal. It'll be CapEx. Are these big hyperscalers investing and continuing to invest? And that's going to underpin where NVIDIA is, topping 5 trillion today, 5% up in the market. If we see those strong signal points, I expect that to continue.
What if they're not continuing to spend in the way that they've been spending before? Do they need to show proof of how they're monetizing?
So I think we're still, Sam, in an arms race phase. I think we're starting to see monetization. I was out with the CEO of Lenovo last week, had dinner with him. What he's seeing is starting to see adoption of AI. So we're starting to see these things come through. I think the MIT study of, what was it, a couple of months ago now, around 95% of these AI projects not coming through into ROI and adoption. I think we're starting to get past that. I think that was one blip. I've seen it quoted probably 15 times over the last couple of months. When you talk to people on the ground, we're starting to see adoption. I don't think any of those names that I mentioned, these are 5 huge mega caps. 4 of those are underpinning what NVIDIA's doing. I don't think any of them are going to blink, and they're going to continue to maybe keep their investment levels the same as they've said over previous quarters, but I certainly don't see anybody taking it down.
Okay, and just of the 3 names that we're going to be hearing later on this afternoon, obviously Google, Meta and Microsoft, has been interesting actually because when we've been talking about some of these mega cap players, the ones that many analysts seem to think are best positioned are sort of these 3 names. I mean, many think that Alphabet, Google is in really a sweet spot as far as really the sort of favourite there amongst the batch, but that Meta is going to continue to spend because of its AI ambitions, and Microsoft, everything looks pretty good there, particularly with regards to the partnerships that they've announced even this week. So I'm just wondering, across the board, who do you see as sort of the best positioned right now?
I think Google, when I look at Google, I think that business is massively undervalued. You look at some of those more strategic longer term bets, I don't think they're built into the valuation. You look at the likes of Waymo with autonomous driving. I took my first Waymo in Atlanta about a month ago. Came away ridiculously impressed. I think as they look to drive adoption, I see that getting traction. I don't think that's factored into the valuation. You look at what they're doing with DeepMind, some of the things that they're doing in healthcare. So you look at some of those strategic long-term bets, but then you go back to the core business. You look at Gemini, you look at Workspace. I think the only blip is the browser wars that are starting up again, but we've got such strong presence with Chrome. We've got such strong presence with what they're doing with search, and Gemini is perfectly positioned there. I think if Google doubles down in some of the key areas, I just migrated to their Pixel 10 Fold phone, and I'm ridiculously impressed with that as a form factor. Moved off Apple for the first time out in probably 15 years. So I think there's a lot to like here about Google, but for me, that core cloud business, you look at obviously what they're doing in ads that continue to be the powerhouse there. I think if you look at them holistically, and I've read and gone down this rabbit hole, if you look at all of the constituent parts of Google, still think they're massively undervalued.
Okay, Stephen, always appreciate your analysis. Thanks for helping us on a day like this. Steven Dickens, CEO and Principal Analyst at Hyperframe Research, joining us there. Appreciate your time. Let's trade it now with Tom White, host of Fast Market. An example trade for Alphabet, Google this morning, Tom.
Yeah, bar's really high on this one, Sam, going into the report. The option market's pricing in about a plus or minus 6% move in the shares, about $16.50. Either way, the RSI overbought on it on a technical basis at this point, but that doesn't seem to matter at this point. So I looked at a strategy. If you think the stock's going to continue to move higher, this takes advantage of it, but I fixed it in a way that I can offset some of the costs on this bullish position. So I looked at an unbalanced or broken wing call butterfly to the upside. I used the October 31st weekly option, so those expire in just 2 days, so really short-term positioning. Earnings type of trade here, where I'm going to buy one in the money 267.5 strike call, and then I'm going to sell 2 of the 280 strike calls, and then buy 1 of the 285 strike calls. So in essence, you're buying a bullish $12.50 wide call vertical, offsetting some of the cost by selling a $5 wide call vertical with that same common strike at or near the 280 strike. That's where you want the stock to go. And that's about that 1 standard deviation, maybe a little bit within that level. But you're going to pay roughly about a $3.50 debit. It might be trading about $370, $380 right now. Stock has moved higher. But the debit you pay is going to be your risk. So if you pay $350 of risk. Takes your break even to 271. That's less. It's about a 0.5% above the current share price in there. So you don't need a big, massive move to the upside to get above that break even. But you can see here, it apexes a profitability at or near the 280 strike. But even if it goes above 285, Sam, we're going to see more than a double in profitability. This is just a way to offset some of the costs after a stock has run this far, but maybe you think that it's going to go higher.
Well, as I said, according to the analyst, really this name seems to be in a sweet spot as far as its position amongst the batch here when we hear from these Mag 7 names. Thank you so much for that, Tom White. A good look at Google Alphabet ahead of these earnings later this afternoon.